The power of these charts is undeniable in their ability to help you track trends and follow things that are happening in the stock market. We're going to go through the 4 charts we go through every day, starting with the S&P 500, going to the Nasdaq 100, 20-year bonds, and gold. Everything is down for the day. If you're interested in seeing what's going on and what the future holds, we're going to try to help you follow these trends. Let's jump into the S&P 500 first. Down for the day just barely, 0.05%. Still have a nice green up candle forming for the week. We can see that price movement's well above that weekly trend line. Derivative oscillator still heading up. Now remember, we still have 2 full days for this weekly candle. It's a 5-day candle, so we don't call candles until they are drawn. Price percent oscillator heading up, derivative oscillator, like I said, gaining momentum, green up candle. We go from the biggest chart we look at to the intermediate chart. That is the 2-day chart. And of course, the 2-day chart that finished drawing on Tuesday, the 26th, green up candle. What we have happening with this latest candle is it's pushed through, even if we draw that trend line up through the latest candle and try to go and connect. Remember, we always want to try to connect 3 candles together. That is, well, that's not impossible to do. If we do that, we still see that even with the drop, we're just sitting right there, trying to push through. So this is showing some weakness. Now, we had that happen back. We've had it happen like over the last few weeks. Had it happen on the 29th. 2-day candle ending the 29th of January. We had that happen also on the 2-day candle ending Friday, the 8th of February. What we see happening is the market digesting upward movement. That might be what is happening. We look at the price percent oscillator, though, we see it's going quite flat. It sort of did similar things back, but it's flatter than it was. Derivative oscillators losing some momentum. So again, we'll continue to watch, see what we see, as we push through 2-day trend lines and, we see things on the price percent oscillator going flatter, starts giving us some concern. So we just watch, we just see what's happening. We then also look at that 4-hour chart and we see down strong in the morning with a bit of a recovery in the afternoon. 4-day chart crossed over going down back in the morning on Tuesday the 26th after peaking out on Monday in the morning, the 25th. Derivative oscillator gaining lots of downward momentum. Price percent oscillator heading down. So again, price movement on that 4-day chart is above the 4-hour chart is above the 2-day. So we'll continue to watch and see if you're in the S&P trade right now, because if you recall, we had that weekly vertical crossover back several weeks ago, back on Friday the 25th of January. Things have been good to us, a couple of pullbacks along the way. So just watch as this has been spreading sideways and down, and we'll just continue to monitor and see how long this move will go on. So we go from the S&P 500 to the Nasdaq 100, the tech stocks as represented by QQQ. Personally, my favorite chart, the one I enjoy trading the most. So what we see going on there is, again, going into our 6th week of up movement. Things looking nice. Derivative oscillator gaining just a little bit of momentum still. Price percent oscillator heading up. We do have a green up candle. We go from the weekly to the 2-day. And again, what do we see there? Well, if we try to track this latest candle, and again, I don't try to draw things just so they work. What I want to try to do is connect 3 candles as best I can, and that's 3 good candles in a good trend line on the 2-day chart. Still above it, red spinning top right now, the first day of this latest 2-day candle. So we'll continue to watch, see what we see. Again, price just sitting right there on that 2-day trend line. Derivative oscillator continuing to lose upward momentum. Price percent oscillator going pretty flat. It's gone flat before when it slid sideways for a 6-day period. So again, could just be digesting gains. Doesn't mean the 2 days rolling over necessarily, but we're going to watch it like a hawk if you're still in that up move. we go from the 2-day to the 4-hour, and that's where we really see the sideways slide down in the morning, just like the S&P, up a little bit in the afternoon. However, that price percent oscillator is negative, derivative oscillators gaining downward momentum. So we'll continue to watch things and just see how it all shakes out. Again, price is nice at 173.35, so just continue to watch. If you're in that trade, we don't have all the warning bells going off yet. Now, you can take profits anytime. You could have cashed out back on Monday when it hit 174.66, but don't beat yourself up. We've had things level off and actually go down and then recover, so that weekly is still looking clean. That 4-hour, that 2-day is getting weaker, and the 4-hour is negative, but just mostly sliding sideways. So we'll continue to monitor and see what we see. That's why you got to practice every day, my friends. Practice trade. Practice with us. By that, I mean filling out your daily market worksheet, at least your weekly market worksheet once a week. And every time you do a practice trade, remember, we're not a stock calling service, we're an education firm. Fill out and do the practice trade sheet that we have. It's free. It's available in our show notes. If you're not a subscriber, go ahead and subscribe at chartingwealth.com. It's free, and you get an email every day that includes the video and all of the links to all the great stuff we have, including our book that is for sale. So please join us. Now, let's keep moving through. Almost done. We see on 20-year bonds, they're down the most, down 1.13% for the day. And so far, we have a weak week that is forming. We see that the price percent oscillator is heading down, derivative oscillator continuing to lose upward momentum after 4 or 5 weeks of up movement. Remember, we had a weekly vertical crossover all the way back on the week ending the 30th of November last year. Up for many weeks and really just sort of sideways. I mean, up some, but primarily peaked out all the way back on Friday, the week ending Friday the 4th of January of this year, and sliding sideways up some for the last few weeks, but again, really drawing down, pushing through the weekly trend line, seeing some real weakness. We go from the weekly to the 2-day, and of course the 2-day crossed over going down all the way back on the 15th of January, and really you can see that sideways slide there, continuing to dump over, going down. We don't have a trade because the weekly's in a confirmed up move, 2-day's in a down move. Remember, we have to have the weekly and the 2-day moving in the same direction. Why? Because there are long-term and intermediate-term trends. They have to be moving in the same direction. What do we see going on the 4-hour chart? It's tracking down after it crossed over, going down back in the morning on Thursday, the 21st of February, and sideways and down mostly. So don't have a trade until things shake out in the 2-day and the weekly chart. Lastly, we go to gold. Now, those of you who are gold bugs, I know you love our weekly chart in gold. It is beautiful, isn't it? We can go back a year on this chart and just have beautiful charts, beautiful results, because the weekly vertical crossover has its own magic most of the time. Now, some of you have asked, I got this question from some of you yesterday or over the course of this past week. Can I use your methods on other stocks, on other ETFs? And of course, we actually say that at the beginning of our show notes. Yes, you can, if it's a chartable stock or ETF. Some things, my friends, you can't chart. They just don't have reliable, they just don't have reliable charts. They're all over the place. They're up, they're down. There's nothing to them that allows them to be chartable. So for things to work, you have to be able to find trends. And of course, the trend in gold on this weekly chart is absolutely gorgeous. We see it weakening here of late. It's gone flat on the price percent oscillator, derivative oscillator losing momentum. We have a red spinning top pushing through that 2-day trend line just above the weekly still. And as we go from the weekly to the 2-day, you can see that we've had a weakening over the last, that would be 5 days. The first day of this latest 2-day candle, we got to have this confirmed before we're going to draw it down. Looks like it's going to go that way in the end of the market on Thursday. We'll see just what happens, but the price has pushed through the 2-day trend line at this point. And of course, the derivative oscillator has gone negative. Price percent oscillator heading down. We go from the 2-day to the 4-hour. And of course, we saw down movement in the morning, more down movement in the afternoon, down 0.17% for the day. So we'll be watching. Maybe gold has topped out. Maybe it's just going to track down for a little while and not pull that weekly chart over. But if it does, what can you expect from gold? Well, if you look back in time, gold is probably going to track down for quite a while. It did when it crossed over going down back on the 16th of February. It went up for a few weeks longer, and then it really accelerated when it pulled away from that red signal line back on the 20th of April, and of course went down for many weeks. And then when it crossed over going up there in October, it, of course, has gone up for many weeks. There are a few times where it'll slip sideways or down, but the weekly vertical, the power of that wave is just incredible in a stock or ETF that is trackable. So, one of our lessons for the day, you can only chart things that are chartable. If they're not chartable and you can't find trends to follow, don't waste your time. Go into something that is. And when you find something that is, does that not sound like a gold mine to you? So, you want to know more about what we do? Buy our book, Charting Your Way to Wealth. First, for free, subscribe. Just go to chartingwealth.com and sign up. And then you want to know more, buy our book. And of course, if you are a follower and you believe in what we do, then you need to help us. And you can do that by becoming a Patreon supporter. And then you get all the really good goodies. You get our Bitcoin chart, our Bitcoin training. You get our short chart training. You get our long chart training. That's the quarterly chart and all sorts of other goodies. Plus, you get that monthly phone call where we talk about the things that you are interested in. And then I review the stock and ETF charts that you are interested in looking at. So find more about that. Follow in the show notes. Hit the link to being a Patreon supporter. God bless, my friends. We love to hear from you. CW@chartingwealth.com. God bless from the whole team here at Charting Wealth World Headquarters.